Debt ceilings, Fed interest rate hikes, regulators attacking crypto, companies moving offshore. Sometimes you just want to either puke or ignore the fundamentals and just look at the damn chart. And that's what we're going to do today. I have three of my favorite technical analysts. Of course, Chris Inks, my co-host on Wednesday mornings. Nice to say that. Feels good. And two of your favorites that have been on this channel no less than 7,000 times each. And last time we were on together, myself, Big Cheds, and Crypto Birb, had some really good calls, man. Cheds, we'll talk about that. But, man, that was when the market was just starting to drop, and we kind of nailed what the potential entries would be coming up for months. So, guys, we got four traders today. It's what we do on Wednesday. Going to take a look at some charts, see if we can find some alpha for you. Don't miss it. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of Wall Streets. Before we get started, please subscribe to the channel and drop some vitamin D on that like button. I have a vitamin D deficiency of some sort, apparently, which is weird because I feel awesome all the time. But I have vitamin D on my desk to remind me to take vitamin D, which I generally forget to take. I'm going to be honest. It's right there. I also have a stack of bills and notices and notes from my wife of things to do, and I wholeheartedly ignore those. I'm going to bring Cheds on right now because I can see he's got a bottle right there. What do you got?
Bro, it's something like 40% of people have a vitamin D deficiency. It's like one of those things where, I guess because we're on the computer all the time, we don't get sun. You know,
I thought that the computer was, I thought it was like a tanning booth.
It is. That's why I'm so tan. Can't you tell?
I've got these blue lights behind me. Those are giving me vitamin D through the pack. Birb's going to be here in a couple minutes for anyone who's wondering. But Chris, how you doing today, man? How you feeling about the market in general?
Nothing's changed, man. Still feel bullish on it. I look at it a few different ways. The base way I look at it is Wyckoff. It just is screaming accumulation. The second way I look at it is Elliott wave. People usually jump on that because it's easier to say, oh, your numbers are wrong or something, but very few actually understand Wyckoff's analysis. So, but that's the basis of mine, and there's just absolutely no reason right now. It's just a pullback to the weekly pivots holding a support. So, yeah.
All right. I mean, we should just start looking at some charts, right? Cheds, you're the guest. You want to go first? I think we'll start at Bitcoin and see where our degeneracy takes us.
All right, cool.
We got it. Let's see what you got, man.
So he's Wyckoff. I'm Wycon. It's a kind of a different approach. I'm not judging or anything, but look, and it's great to see you guys, and it's great to do this. Thanks for having me as well. Love the new format of the show. You always put some great stuff out there, Mr. Melker. So thank you. It's a weekly chart. That's the trend. The trend is the 200 moving average, simple moving average in classical charting. You have a price above it. You have a price above a rising 200, right? It's bullish. Whether it's bullish or bearish often depends on how people are feeling, and that's based on when they're getting in. And, if you bought in at 30K, thinking it's going to go to 38K, why would you say 38K? Well, 38K would have been your measured move from the inverted head and shoulders, complex, wide left, narrow right, taking the height of the head to the neck baseline, and you're extending it. But the problem, thing you want to think about with measured moves, and I've been kind of riffing on this a lot recently, is you can't ignore obstacles in the way, right? So when you have your breakout, that's a poorly drawn line. When you take your kind of breakout from the neck baseline, you can't ignore the bottom of the 180-day rectangle, right around 30K, this consolidation cluster here. So the price will need to pause and consolidate. We're looking at it as a potential stair step, maybe bounce right off that level. So the price needs time to churn. We had a beautiful move. We doubled off the bottom, and you have the larger head and shoulders into a smaller, more local head and shoulders. And I want to talk about that because people are freaking out. And I actually don't care about this head and shoulders, and I'll tell you why. Even though you can draw it, draw your shoulder, your head, your shoulder, you get your horizontal neck baseline. Oh, wow, we're going to go to whatever, 23, 24K. You can't, problem with this, you can't look past 25K, 25, 25.5. You still have this level to watch. So again, we have a key level in between a potential measured move. So we're back to really just simple classical charting, horizontal levels. We're just watching essentially binary, in my view, bullish above, cautious below 25.5K. And that's kind of how I'm looking at it right now. We're consolidating. We're above the 200. Let it play out. Give it some time to kind of do its magic, and just stay patient. And then we talked about this before. I really just think for the rest of the year, kind of just doing this. We're just kind of just chilling sideways, and everybody's annoyed, and we're all picking up new hobbies because the market's boring, and that's what I think. So.
I mean, 25,212, that's the level for me. I've been screaming about it since the second we broke it. So it's nice to see a confluence of opinion. Then again, like if you get the measured move, it'll be that wick that terrifies everybody and they all are dead and get stopped out or whatever. But here, Chris, take your wide view here.
So I've been, posting a lot about just the spot. So the other day I took up the CME here because, the bottom structure is a little bit different down here. With Bitcoin, you had the terminal shakeout here, and then you had a lower low, slightly lower low. The CME, you had a higher low. So the count's different, but at this point now, the way I'm looking at it, they're both the same. They come out to a 1-2, 1-2. Again, just what Cheds was saying there. I mean, really, if you're looking at this as a, inverse head and shoulders here, all you're getting is a retest of resistance as support right now, which should lead to it rallying up. Right now, everybody's worried about this gap down here. Was this right around 20,000 or so, 20 and a half? But that, there's different types of gaps, guys. And if you're interested in gaps, I mean, this is a breakaway gap. You're popping up heavily on heavy volume here through this resistance. And usually breakaway gaps, they're one of the most least common to get filled. Yep. So, when you see that, I don't normally assume that it's going to get filled. So I'm not overly concerned about it. Again, to me, just like Cheds, man, it's this 25 and change area. Yeah. That was what we talked about back as we came down after mid-August, because this is the mid-August swing high. And whatever chart you're on, if you're on the stock indexes, if you're on Bitcoin, whatever, I mean, that's the point. That was the, basically the level you needed to get above. And for some stock indexes, you still have to get above it, but the Dow got above it months ago. But, and Bitcoin's above it now. And so, as long as we're up here, my first thought is, we're headed up higher. If we do break down, I'm not thinking, oh my God, we have to go down to, 12,000 or something. All of a sudden there's a lot
over. We're dead. We're going to 3K. Do not even read Twitter, man. Come on.
Mm-hmm.
But there's a lot, like Ched's saying, man, there's these, these other major support areas. And in the building of this 6 months, we've been rallying 100% here. Yeah. We've built multiples of these areas, and you can't just say, okay, well, prices dropped $300, so now we're going to 3,000. I mean, it just doesn't make any sense. It's all emotional. Yeah. You have to definitely make your way through those areas if you even intend to get anywhere near that. So it's just so much support that I see right now. And so I'm not even worried about it until it actually does something. It's just silly, I think, to think any other way right now.
That's a great point with the breakaway gap, right? It's not a common gap, a measuring gap in the middle of a move. When you gap up above resistance, and that's a strong move. Usually you'll continue off of that. It's a great point.
Yeah. I mean, this is literally from over 3 years ago now, but in case anyone's curious about the gaps, I literally wrote an article about it in Cointelegraph, and the first part is breakaway gaps and how they're not going to get filled. Yeah. So all gaps are not created equal, I think.
Nope.
Main point being made there. I mean, we all have literally like the exact same chart, I think, here for Bitcoin. So I guess then the question becomes, what's the plan if it loses 25K? I guess, right, let's give some actionable sort of, I think everyone's buying 25, but if it goes 24, are you putting some short orders at 25 for that retest?
So what I'm thinking, so let's just kind of draw the line. And so I'm always expecting the market to try to screw me. And so like if we dip below, I'll be watching for a deviation. I'll be watching to see, do we quickly kind of deviate below 23.8, 23.5 and boom, quickly recapture. I mean, that'd be a wonderful long signal for it to dip below and recapture. And if you think about major levels, with Bitcoin, they rarely trade super clean. You get these kind of fake outs. The market, again, is going to try to find a way to shake you out of your position, right? You think about like a common double bottom with the lower low stop loss sweep, right? That happens all the time. So if we get a deviation like that below 25K, I'd be looking and really expecting for it to quickly recapture that level. If that doesn't happen, I'll shift back to being cautious. And what I'll do is I'll kind of shift back down. Of course, I'll be watching daily MA200. I'll be watching the attempted higher low structure. We had this beautiful hammer candle, right, that people got long off here. Entire candle below the lower Bollinger Band. This will be a very important level to hold for kind of a rising demand structure. Everybody will be drawing their fancy little, trend line. As a reminder, there's no line. There's only a trend. So I'll be kind of watching that as well. And we see Birb driving the Ferrari.
Steve there.
Birb.
What are you driving there? What are you driving? Porsche, Ferrari? I can't remember. Beamer, Benz, and Bentleys.
Yeah, it was. Yeah, hang on. It was. I'm trying to figure out some worst car that you can figure out in the bear market. I don't know.
Bugatti.
Pinto.
That's an
Pinto. He's not from our era. We'd be like, yeah, you go. Ford Pinto. Let's go. It looks good. I like
right
that
on.
interior.
Good to
Matches
see
your
you.
beard. Yeah, man. So listen, I guess we're not getting any charts from you, but you could definitely tell us what you think of Bitcoin here.
Yeah. Obviously, I mean, there have been a couple of posts that I actually just uploaded on Twitter.
Yeah, I shared that thread in my newsletter yesterday. Yeah.
Woo! Wow,
your epic thread. I literally was like, I'm not doing analysis today because Birb is better, and I just shared your thread. Yeah.
No. There's so much I learn from you, Scott, every day, and having legends like Cheds and Chris, my good friend. It's pretty awesome. Man? So I'm always happy to see you guys, and I'm no one compared with such a status of the legends that you guys are. I mean, there's so much admirations that I have for you.
Yeah, so give us your broad strokes on Bitcoin, what you're thinking here, I guess, of the market. Obviously, anybody who has read the threads, follows, knows you're generally bullish, which is the same as the three of us, which maybe is scary, but it's nice to be in confluence. So just give us the broad strokes.
Right on. I mean, in terms of being generally bullish, that it happens typically during the bull markets, right? I'm generally bearish in the bear markets. And what is actually displayed right now, I think, is the 200-day moving average, basically, or some sort of like an EMA, maybe. However, it looks simple, right? So, long story short, the very direct indication of what the bull market or the bear market status is basically even you can turn off the candlesticks, right? That provide so much noise, and just leave the average alone. And if the average inclines consistently, it is a simple case of the bull market. And otherwise, it is a bear market, right? So by observing those long-term trends, we have the answer to the most basic questions that typically nurtures, most of the traders, right? Because when we approach trading for the first time, we get to search and seek the answer for what kind of trend we are looking at, right? And we never can find enough of a sufficient answer because there's every time frame you look at, there is a different trend, right? On one time frame it goes up, the other time frame it goes down, and on another time frame it's flat. So by observing, first of all, those longer time frames, right? Those longer time scopes helps us filter away all the noise that is irrelevant, that is just distorting the picture, right? And just what it looks, again, it looks like the average is basically climbing, right? For what Cheds is displaying, I think. So exactly that, right? So the bear market is a consecutive, consistent decline of the primary trend, of the bull market trend, right? Of the 200-day moving average. The bull market is opposite, and basically it is a consecutive, consistent, consequent incline. And this is what we're looking at, right? However, it may not look so, and it may cause a lot of dissonance, in our minds because it's early, right? And we still have got so many people stuck in the old bear market frames. Basically, being conservatism, it is called the conservatism bias. It is an error. It is an actionable error that loses us money if we kind of just for the sake of being right or for the sake of missing out previous entries, right? We regret missing out, and hence we are waiting for lower prices, completely ignoring the fact that the market has turned, right? So the reality is, the fact is that the trend has turned, right? And this is not so much about my opinion. My opinion can always be wrong. However, I'm not commenting on an opinion, I'm commenting on a fact, right? And there is not a single person in a sane sanity of mind that would tell me that on the right hand of the chart, the line is declining, right? So there is no way to deny that we are in the bull market. However, it's an early stage, so it may get a little bit choppy.
Yeah.
But the internet on your Honda Prelude is It was just drop there for a second. Definitely a prelude, right? Civic? He's in a Civic. Honda Civic, I think.
Yeah.
I think we all. So listen, we're all collectively bullish here. So the next natural question then, well, Birb, I literally think everyone here is effectively long some way, shape, or form. Like I've been long officially since sub 20 spot and just haven't even looked at it, right? And it's kind of not a thought. I wouldn't even say it's a trade. I'd just say I bought a lot when it seemed like it was at a discount. So if we're looking at Bitcoin here, then what does this mean for altcoins? I've actually been a bit surprised. I don't know. In past cycles, if we saw Bitcoin make a double move, right? I mean, we went from below 16,000 up to 31 and then consolidate sideways. You saw sort of massive altcoin movement across the board. Now we've had these sort of like segmented alt seasons, if that's what we're going to call, like literally people printing meme coins out of thin air and then pumping and dumping them all over the place. But we really, I mean, just seems like the alt market in general has still just kind of continued to bleed and bleed and bleed for months, right? So we're not really seeing the old cycle of Bitcoin into large caps, mid caps, small caps, and back. We're just kind of seeing Bitcoin, right? With select alts popping off here and there on little narratives. Like today, you know, Axie Infinity got listed on the Apple App Store. And so, of course, that means that like Axie jumps a little, Mana jumps a little, Sand jumps a little, Pyre jumps a little, anything that's like metaverse or gaming, right? So, but they seem like these kind of little moves and then back. So, I mean, I guess that was a long way of asking, what do we think of altcoins, the market in general? What's going to take to get them going?
Those are gross charts, man. Really?
Yeah, they're bear market bounces, clearly, is for now. Yeah.
Oof. I mean, what's been strong before this? Like INJ, right? I don't know, Chris, you watch INJ, like that's had some relative strength, right? There's, you know, like for me, I'm not long in anything below a rising 200, right? So like INJ is a bullish chart, right? And there's very few charts actually that have this type of price structure. INJ is one of the better ones. Mask had been pretty strong, kind of starting to hold that 200. A lot of alts are just kind of starting to tag that fetch right there to 200, kind of needs to hold it. So I think you got to be really selective with what altcoins you are playing. But in general, for newer people who are watching, you want to avoid playing anything with the price below, you know, the MA200. What do you guys think about that kind of approach?
Yeah, I mean, I agree. That's an easy thing for new traders to come in. You know, it's moving averages are easy especially for newer traders because, you know, it's applicable across all timelines. You know, you don't have to figure out some complicated this or that kind of thing. So for a new trader, it's an easy way to kind of find a way to get into, or, you know, if you should even get into the chart. I think 200 is a great one because we've had this long, you know, year long or whatever, depending on what coin you're looking at, bear market, you know, the downtrend and then sideways. And so, you know, you say, okay, well, where's my line in the sand? At what point do I go, okay, well, technically this is the first real technical good area that's easy to find that I can do. And I think, you know, especially if you're newer, I think the 200 is a great way to look at it.
100%.
Birb, what do you think? I mean, how are you sort of addressing the altcoin market in general, but I guess then how you would actually identify which ones are worth trading when it's kind of just this general bleed?
Yeah, got you. In advance, again, I'm so sorry about any technical issues, right? I had to go hop in a call last minute.
You're good.
Regarding the altcoins, you know, I'm trying to apply sort of a momentum investing, right? So basically, I would want to long strength and short weakness. By short, I do not necessarily mean short selling like on futures, right? By being short means basically underweight on your portfolio, which means that you can have something less than the benchmark amount, right? So being underweight is an equivalent of a short from an economic viewpoint in a way. I don't need necessarily to apply like much leverage, right? Because at one point, capital is your leverage on its own. So whatever I would do about the altcoins is that I'm not really heavy into altcoins. Maybe let me just put it straight and forward, right? I'm not heavy in altcoins right now. Most of the holdings, I think it's going to be close. When in regards to crypto portfolio, about 65%, I think, is going to be about in Bitcoin, right? Maybe 60%, there's about 30%, 35% of Ethereum, right? And then on top of that, you have some side kind of like minor investments locked in for months and years, basically, right? So this is the stuff that I often discuss, right, in public. Those are the stuff that I'm somehow invested in, right? I do not feel, first of all, the attraction anymore to go all into shit coins and meme coins, right?
Yeah.
That's different. I mean, I used to be like, pretty much everyone else at that point, right? And I would just bail in and just put all the money in some meme coins, right? However, I've completely deviated against that, right? I mean, I'm not doing that anymore. I don't do that. So for that reason, I completely missed out on all the meme coins parties, right? I completely missed out on that.
But you got that great jacket though,
so-
brother. So you're doing okay.
Oh man, it's actually hot as crazy.
It's
I
a
don't know.
beautiful
The
jacket, Birb.
temperature, by the way,
It's a really nice
thank
jacket.
you. It's actually, yeah.
Oh, the gun's
Let me
coming
take
out.
it
The
off.
guns are coming
Let
out.
me take it off.
The gun show.
Let me take it off.
I don't think any of us
Let me
caught
take it
the meme trend heavily, I'm assuming. And by the way, if you were trading with any size outside of Pepe, even if you quote unquote caught a 10 or 20 or 30 or 40x, you probably couldn't get out. It was a liquid. You'd crash price 50% by trying to sell. But anyways, go ahead, Birb.
So yeah, I mean, you are right about that, right? So I completely missed out on the meme coins. I wasn't much particularly paying attention to those. I mean, if I were to argue, of course, it sucks that then it's shitty that so many people loses money. So many people lose money constantly, all the time, and all those kind of like spikes, all those opportunities periods, right? Call it like those minor alt seasons or something. Paradoxically, I see some good sides of it as well, right? On the flip side, when you think about that, those are the typical periods that you see in the bull markets, basically. Whenever there is an empty shitcoin that just pumps to the heavens, like, pumps through the roof like 1000x, this is basically good old crypto, right? And whenever that happens, this only happens in the bull markets, basically, right? So this only kind of like gives you a little bit of more reassurance. You can feel a little bit more relaxed about, getting along with the trend and flowing with the trend, right? That is to the upside. For what regards portfolio attribution and allocation, like I said, I'm not a big fan of altcoins right now overall, mainly because it depends on an early stage of the bull market, right? So if we follow those market cycles, in my opinion, of course, maybe wrong. I've been wrong 5,000 times, including the most infamous deal about Litecoin, right? That
How
Cheds
dare
brought
you? We don't talk about Litecoin. No. Yeah, okay.
Yeah. Listen, I mean, I had so much fun with that, right? Otherwise, again, I've been wrong 5,000 times in just past couple of months, right? So consider, I may be wrong at any time. So however, what I do imagine is that being in a sort of a disbelief stage, right? And I claim that by evaluating an amount of cognitive dissonance, right? And this is what I mean by people getting caught and stuck up still in the old bear market frames and thinking, right? Saying and waiting for this 10,000 or for 5,000 or who God knows what, right? And the reality is that we climb higher on average, and that's a reality, right? So the bigger the distortion is, the bigger the actual disparity between the expectations, the more despair there is, and the more rejection, denying of the reality, which is basically a textbook definition of disbelief, right? Of this cognitive dissonance. So the greatest amount of cognitive dissonance, paraphrasing the CMT studies, is basically experienced during the early stages of the reversal. So the more of the disbelief, the more of denying the reality, the more of being, caught up in the old bear market frames, the more likely and the more properly we are in the disbelief stage. And disbelief isn't, like I said, happens in the early stages of the reversal. And we had just had a midterm bear market, right? So what can it reverse to? Like, it cannot be more bear market, than the bear market, basically, if you know what I mean. So it had reversed, obviously, and it reversed to the upside. So we are looking at a reversal with people still being caught up in the old bear market frames, right? However, the reality is that it translates to the low liquidity still, right? So there are very few buyers. For the altcoins, it's not good.
Yeah, I agree. I think that it's interesting because it's about time frame. I agree that these meme coin situations happen in bull markets, but they're always, to me, a local top in the bull market before we get a retrace. Like they go nuts. You have Elon Musk, Doge, Saturday Night Live, whatever, and then you see this massive retrace. It gets boring for a while, and then you kind of get another push. I just don't know like what people expect. Bitcoin literally doubled in price almost.
I know. Come on.
It doubled.
I
right?
know.
Chris, I see you have a ton of Cheds. I don't know if you're looking at anything specific. You were jamming on the charts over there. You got anything you want to look at? I know Chris has some too.
Yeah, go ahead. I was just trying to keep it flowing.
I'm gonna get. I liked that. I should have put music to you, like searching charts and stuff. It would have been good. Chris, you got a bunch of things up here. Maybe we can just riff off of this.
Well, yeah, I've got a few I'm looking at here. Optimism here, which that OP USDT here. I mean, it looks pretty clearly like 5 waves up, ABC down, 61.8. That's the golden pocket on the retracement. Finding support right around the S2, what is that, daily pivot. And also, of course, as we're seeing, across many of them, you look here and you say, okay, well, is this kind of a more or less a major area of support resistance? And it does appear to be. So, I mean, for me, if you're in this, I'm thinking you're looking at steps here. So you want to clear the daily S1 pivot that's right there around $1.80, $1.88 or so. If you can do that, the odds are you're probably going to hit the daily pivot up here, which is also this wave B triangle resistance area right around $2.35. And if you can impulsively break out above there, wave 3's got a minimum expected target up there at $6.17.5. So, none of this says it can't go down lower here. If it does, probably be looking right here around $1.25. And then you can look a little bit lower here at $1.01 here. So,
yeah,
go ahead.
I was gonna say I just pulled it up like as is tradition while you were charting. I looked at it. This kind of, we don't have that much history, obviously, but it's kind of a never-ending bull market on this coin. All you have is higher lows and higher highs. I just pulled this support. You can't get a much more firm support than that blue ascending line right there. And then pulling back to the highs of this entire downswing is literally exactly where it bounced at $1.47.
Yeah. Yeah, and it's right. It's just right that pullback, that bounce is just right above the weekly pivot. And so,
now, Cheds, you can tell us why you're bearish.
Well,
I heard that.
I know, right? Well, look, all right. OP's it's back below the 200. First of all, it's called optimism. I was going to make
that's a daily 200 for everyone listening because we were talking about weekly 200s
okay.
on the yeah.
I was going to make a dad joke about it's called optimism, but look, you've the price pausing, using this as support. We're back below it. So, if I kind of look locally, I get the price unable to close above the EMA 8 primary downturn resistance, back below the 200 daily 200, maybe flattening out. There's evidence of weakening bull trend here on the daily chart. So, I'm certainly aware of that. Should the price what this does for you though is kind of identifying this pivot level. If you're not in it, if the price can flip back up above $1.80, $1.90, you have an easy long trigger. So I can kind of identify that. But I'm going to be cautious here, just kind of based on my own style. And I would wait for it to drop maybe down to about $1.30, $1.35 for me to really start to get interested and look at that as kind of a throwback or maybe a stair step to this price structure, from back in late 2022. And that's just how I would look at it.
Yeah. Go ahead, Chris.
No, I was going to say, yeah, that target he's got to downside. That's that first, that's that 70.5 retracement, that institutional level right there around $1.25. So yeah, definitely would watch that. For me, pivots are actually my big thing, not moving averages, right? And so we've got an impulsive breakout through the weekly pivot here, large candle spread, spike of volume, rallied up to the R1 pivot area. And so, usually when we have this kind of move, we expect a retest of the pivot area and then we head up. Now, it doesn't mean it can't wick below it, which, it could wick there or whatever. But generally, this structure, when you're using pivots here, get you this move up here, get you a pullback to the pivot, and then it breaks out higher. In terms of Elliott wave, usually what that ends up being is 5 waves up around the R1 pivot. There's your wave 1. And your pullback then toward the pivot is usually, 50, 61.8 around that area. And here again, we've got that going on. So, I'm not primarily a moving averages person. I'm much more a pivots person. And, just what I've noticed throughout my 27 years, that's something that I watch, that particular structure. When you get the impulsive breakout above a pivot, rallies up toward the R1, pulls back to the pivot, I'm looking for a reversal. No guarantees, but I'm looking for a reversal at that point, a reason to go long, whatever time frame that is, if it makes sense. And then I'll look for a reason to go up. But, again, could definitely break down further. So that's why we have levels, right? I think that's the one thing that we all do here that maybe a lot of new traders don't, is they kind of get in there and their targets are just, way up wherever.
Yeah.
And Cheds has made it, done a great job talking about this through the show so far, which is you can't ignore the other levels along the way.
Yeah.
And, I like Elliott Way for that because it's just, the fib levels are just easy targets. Pivots are easy targets along the way. And those are helpful for people. Like when I first started as a trader, the difficult thing I had was understanding trends and understanding what is actually the swing high, the swing low, stuff like that. And so, if you're a new trader and you're having trouble, you're struggling with that at first, things like fib levels or pivots can make that a lot easier until you get more used to just kind of looking left and understanding where those levels are.
Birb, can you talk about that a little bit from CMT? You take like a measured move of pattern, and how you can't, like with the measured move, you have to look at consolidation structure in the way, kind of obstacles in the way of a measured move. And have you kind of looked at that with the head and shoulder structure on the weekly chart, and even the small or local one in the daily chart, how when you draw a measured move, you have to look at consolidation ranges that get in the way kind of a measured move. That's something that CMT talks about.
Yeah, I mean, you've just answered that, and you got it right.
Yeah, but you're the guy, though. You're the
Good
guy.
breakfast, Cheds.
I can just shut up and wipe the floor after you've done the work, and that's it.
But how do we identify those levels, I guess, then is the question for your average person, because they see sort of this measured move target, they get really excited. Is the answer then, Cheds, Birb, to just take profit on the way? I mean, I know the answer to these questions. I'm just trying to throw the lobs and the softballs. But as a trader, you shouldn't be waiting for the top of the measured move to sell your entire position, right?
So that is actually a good question, right? And you've touched upon taking profits. So taking profits is probably a little bit different than most people would expect. And it would directly depend on what kind of like a strategy or system regime you follow, right? Methodology. So just based on the roots, based on the root strategies, you can basically be a mean reverter, so trade counter the trends and assume reversals, or you can be a trend follower and assume the trend continuation, which is something that I do, right? And when you assume trend continuation, as in trading along with the moving average direction, then technically you're not supposed to take any profits because you assume that the trend will continue. So why take profits if you can earn more with that, right? So that would negate any sort of like a rational thinking about following the trends, which is basically proven to be the most profitable strategy overall, right? Because eventually in such a strong trading environment, just like you would have Bitcoin, so it is noisy sideways 70% of the time, but when it finally catches on the right track, when it finally breaks and gives this fucking burst, it just continues like a unstoppable and movable, unstoppable object, right? Like the speeding track that would never stop, basically. And by trying to trade counter trends in such aggressive environment, basically like gets you to a point where you short the entire bull market of 20x or 30x, right? That's not something that you want to do, arguably. So being a trend follower, I think is the overall right approach in heavily trading environment that is Bitcoin and cryptos most of the time. Infrequently, however, profitably. Most of the time it moves in noisy sideways, of course, right? It's strongly correlated with stocks and with equity. So because of that, of course, it's going to also kind of like move at times like the stocks do. And some less frequent occasions, it's going to move opposite. Otherwise, again, taking the profits on the way basically is exclusive against the trend following, right? So when you are a trend follower, which is again something that I am, then I would, instead of taking profits, or whenever I take profit, I would search an opportunity to enter back in, because I need to be in the position in the direction of the trend, right? Otherwise, being a mean reverter, which is 70% of the time right on average, right? Assumes reversal at certain pivot points, right? Or support resistance lines levels. So most of the time, instead of using the word of line, right? you want to use the ranges basically, right? Because the word is not ideal, and when you go to a grocery shop and store and you want to buy some vegetables, but you are in a fucking rush and you need to get it done like immediately, then you want to skip the line, and for skipping the line, you can basically pay premium to save you time. So that's what we do, right? If you have time, you can wait for that and you can pay lower price. However, then you get a chance that when you finally get to the cashier or to the reception, you are basically out of the vegetables because everybody else has bought, right? So long story short, it typically happens that traders would wrap an anchor around certain levels much more than just perfectly fit in one level, right? Because otherwise, what is the chance that every single person in the world is just going to be buying at one price of Bitcoin in, let's say, 26,667.57 instead of just aiming for easier to remember round numbers more often than not, right?
Yep.
So I would say that yes, having those anchors, having especially those magical thinking, these round numbers like 20K, 30K, those are very attractive things because they are easy to remember. They're easy to frame our minds in, right? And what happens is you have those layers, on both sides of the levels, basically, somehow building around those orders, resting orders, the buy limits and sell limits by traders, right? They set it up in waiting, and because price gets eventually, to a so-called support level that is obviously in hindsight only, right? It kind of like just gets digested by the opposing force, which is why often happens that the trends locally expire at those local supports and resistance levels or areas because there is a congestion of orders of opposing side, right? So this is what happens, like this ping pong game, like this table tennis play for like 70% of the time. And you are not supposed to apply stop losses when you play the ranges, right? Because your main assumption is that the trend will reverse. So why use stop losses if you assume otherwise, right? And for that reason, again, we love to have those round numbers. We love to, again, I'm a big fan of using volatility indicators. So I would use a multiple of ATR, right? There are some ways that you can actually run it a little bit more dynamic, right? And adaptive. However, the very simple acknowledgement is that you would use a triple ATR, triple daily or time frame ATR to give you a little bit of credibility that what you're looking at is a reliable level, because free ATR, free average volatilities, right? If you use free standard deviations or something, that gives you, right? If
I think
you
we
use,
lost
again,
it there.
let me
Hey,
get back.
Birb, we're losing your
So if
we're
you use
losing
the
your
average
signal.
volatility,
Go ahead. Yeah, you were cutting out, so we're gonna go back to the charts here, Chris. I know you had a couple others.
Well,
Sorry,
real
Birb,
quick,
you
folks,
got really
just
jerky there. Yeah.
For those who are watching, ATR, that's the average true
True range.
range.
Yep.
Just for those who are watching.
Yeah. Let me see here. So I've got this Sand USDT here. Again, looks like we've got a 1. Looks like we've got a expanded flat correction here for a 2. 78.6 retracement, almost to the T. Breaking out impulsively here through this descending resistance. Now, a lot of times people, they want to be breakout traders. I'll tell you what, guys. Most of the time, as a breakout trader, you want to buy the retest. Now, you're going to miss some trades, and this is what's hard for a lot of new traders is, oh my God, but what if I miss it? Well, you're going to miss some of it, guys. The reality is you're not going to get every trade as a trader. You're going to get just a few of them, but you are going to get them. The key is, how do you manage that risk? And so just because you get a breakout of a line doesn't mean it has to continue in that direction. So like we can see with Sand right here, we got that breakout, with some volume and large candle spread here. And basically, again, if you look left, guys, we just hit that immediate kind of previous support level as resistance right there, right? And we're getting rejected off that. Now, that doesn't mean it's going to continue back further, but you really want to see some continuation through this area. And so, initially, I'd be looking right up here toward this daily pivot at 61 cents. So if we can get an impulsive breakout above where we've kind of stopped today, this 54-cent area, that running right up to that, a range around it's never the exact level, guys. You look at this kind of range around it. For me, no matter what my target is, I'll never take my target I'll take like shy of it, a few percentage points shy of it, because when you're trading, you want to exit into liquidity. So you want to exit when other people are buying there toward the top. You want to buy when everybody's kind of selling there toward the bottom. Because if you do that, especially, if you really actually learn to trade and you get good, you do it for a while, you start trading with size. And with size means you need liquidity when you enter. If you don't have that liquidity being sold into, then you're going to be chasing price up. And it's the same thing when you're trying to get out, what you were referring to there at the beginning, Scott, when you're talking about Pepe. If you've got size and you're trying to exit, if there's not liquidity coming in, if you're not selling into strength, then you're going to chase price the heck down, potentially crashing price down, and so you don't win with that. So one of the things I do is, like I say, okay, this is the target, is this pivot. I'll actually look to, exit prior to that. But man, if you can get an impulsive breakout above that pivot, that should carry it above that descending channel resistance. And at that point, you should be looking up here. Wave 3's got a minimum expected target at $1.24.5 or so. So, I mean, there's steps along the way. Yes, I've got this count. Yes, I've got this target. Yes, we've broken out of here, but now I want to see these local steps being done along the way to kind of add confidence to that idea that count, that target is probably going to get hit. If you can't get through those local areas, there's no use even thinking about further on.
Cheds, now you can tell us why you're looking at the 50 and 200 MA and it's below it. And
I just don't. I don't like the chart. I don't like the chart. I mean, it's a great. And so here, first of all, I love the fact that there's so many different ways to trade. Like if we all had the same methodology, like the price would never move, would be boring. I will kind of. So there's a couple things, in classical charting. Like so a move that retests something actually performs worse than a move that doesn't retest. So, and Chris talked about a breakout gap earlier, a breakaway gap. Like that's a great illustration. Like a breakaway gap is a move that breaks above resistance and doesn't come back and fill the gap. So that has a better performance. So, I would love a throwback, ideally a horizontal throwback, but they actually don't perform as well as something that doesn't even throw back, that just kind of continues, maybe kind of has an even a more aggressive demand or buyer structure. Generally I try to, with my style, I try to stay away from using a diagonal trend line for a breakout, because you could throw back and retest it all the way down. Yep. So I generally try to use a horizontal structure. That's kind of one point. Yep. I don't like the chart sand. I really don't like it because it's a downtrend below the 200. But he did kind of point out a really nice clean trigger, 54 cents. I mean, I get that. I can see where the price locally tried to use that as support, came back below and rejected. So now we're listening to the price. That's our job. Yeah. The price has told us here we have a pivot. So, okay, we can go long at 54 cents. And if it does that, I maybe would be targeting, somewhere up around here with kind of a confluence of the falling 200. So maybe you have a trade in there potentially. But, for me, I'm just scanning this. If I'm just scanning this and I see this, I'm just moving on. Like this isn't a chart. I'm looking for a setup for me personally. Yeah. So I'd be a little bit more cautious, just me personally, with this type of a chart.
To your point about diagonals, you can look at the major, and I use them sometimes, by the way. Everyone knows that. But to make your point, I mean, this is sand all the way from the top at $8.48. What a world!
It was so bold.
Chilling here down at 50, and the low was 37. My God, the pain when you look at these. But you had this very clear descending resistance, right? 1, 2, 3, 4 touches. I mean, they're literally perfect. Breakout, very local retest, and spin down. So if you bought this breakout at 62 cents, you're still, underwater sort of here at 62. Although to be fair, you should have sold it probably when it went up to like 90 something.
So but when you think about that, may I chime in real quick?
No. Go ahead, please.
No.
Yeah. Burbs, Ched says no. Okay. Sorry. Go ahead.
Okay, Ched says no. I'll shut up.
Go ahead. We love you. We love you, Birb.
Go. Yeah, listen, I love you back, man. Yeah, listen, John Bolligen would obviously would be proud of you for using so much of the DVs, right? So what happens regarding those diagonal trend lines, there is an excellent professional and excellent guy, Axel Kibata, right? He's also a CMT. Knows chart patterns inside out, and it's so much enjoyable to kind of like watch him work and see what he does about the chart patterns. And he often drops some pieces and educational content about the reliability of the diagonal trend lines being basically much lower than anything that is horizontal, right? And there's reason for that. Like if you have this diagonal resistance, kind of like again, just falling right down towards the right hand of the chart, you're looking clearly at a declining trend, right? So by definition, the upwards breakouts are probably going to fail most of the time, right? Just maybe you're lucky and you're literally watching the very pickle bottom of the chart, right? And maybe you're lucky. However, most of the time, those breakouts are going to fail on the downside, right? So by watching those trend lines, you're basically exposing yourself to trusting something that is by definition unreliable, right? Most of the time. Maybe you get lucky, maybe more likely when you want. So this also regards so-called failed breakouts, right? Or those deviations, or whatever you name that. So what often happens is that you see it pierce through a certain level and the price comes back and to close within the same session below that level or below the threshold, right? So this is basically a specialist breakout, false breakout, fake out, bull trap, bear trap, doesn't matter how we call that. What it still represents is this kind of like an internal pivot within the time frame, right? And when that happens, this becomes a failed breakout, and failed breakouts tend to perform better in the opposite direction than initially anticipated most of the time, right? Because there is this layer of traders being caught in a trap. So due to their loss aversion, due to their different, again, behavioral biases, they are going to close off at times rightly, their positions, contributing to the price actually following the opposite direction, right? So when there are lots of trap traders, the prices are much more strongly react to the local reversal and amplify the effect, accelerating the reversal as a result, right? So this is why it's so important that when watching those false breakouts, you're basically watching it in accelerated reversal with better chances that if you have this long diagonal trend line and there's an upward breakout, and if it fails, then it's more likely going to do what Cheds said, and what you guys are saying, right? It's not going to continue in that direction. So it is a case of a false breakout.
Yeah, I just happen to be looking at the charts here. If you were looking at the 4 hour, I know, Chris, you love this because you're the guy who taught it to me a long time ago. But, looking at RSI, especially on Bitcoin, but oversold and overbought on the 4 hour chart, when you catch that bullish divergence with it massively oversold, you generally get a move. So you would have caught this, maybe 48 cents. And then right when it hit overbought, you could have sold it 53. Yeah. Not a huge move, but a 10% move there just by looking at something like that. If you're looking for ways to scalp, always good to check for those oversold. And I know, Chad, you kind of do the same thing with OBV.
Sure. Yeah, I mean, absolutely. And it was a great commentary by Birb. Appreciate that. But yeah, I use OBV. It's RSI is a bounded oscillator, so I found that it tends to give you false divergence early. I kind of like to wait for like a double. If I'm using RSI for regular, I like to wait for like
one.
Yeah, second double divergence.
Yeah, I don't disagree with that.
And yeah, I definitely agree, guys. Like they're saying, guys, the horizontal is definitely where you want to look, which is why, again, I'm pointing it out here. For me, when I'm looking at charts, I'm looking in steps. And so, if I can see a diagonal breakout, what I'm trying to say is that isn't a definitive, let's go ahead and go long, but it is if it's the first step, then I'm like, okay, so now I want to see, now it's saying, okay, we'll pay attention. Maybe we might get something here, and let's look at the next step. Yeah. Again, for me, my trading isn't, okay, well, we're here, so I'm just going to go long and look up here, right? It's like, okay, if it makes the case here, if things look good, we assume maybe we're going to, catch a reversal here, but I definitely want to see things happening. So, you can look at it a few different ways. You can wait till you get a more major. So if you're trading Elliott wave, and you've got an expanded flat here, basically a 1, 2, 3, 4, 5 for wave C. You want to get above wave 4 because that says that's it. Wave 5 can't subdivide any further. So that's your first real, based on that count, your entry, right? If you're looking to get in sooner, well then, again, this kind of becomes your warning to pay attention. If you can get a nice breakout above this horizontal, you can maybe, partially enter. So you don't go full size, just partially enter. Look for initial target up here around the pivot. If you can get some impulsive breakthrough through that, you can add to that as well. Again, you can add more to your position on the breakout of the 4 there. And in that way, you're kind of limiting your exposure as you're building a position to go long there. But yeah, I definitely agree. as a general rule of thumb, diagonals aren't a lot of fun to go and try to jump into. You definitely want to look for horizontals, which means you have to look left. You have to learn that. Again, I think a lot of reason why, again, the new traders do this a lot, especially with the diagonals, is because they're easy.
Yeah.
It's easier at first than trying to look left and figure out, okay, where are the areas that I should be looking for left? You know, but these are things that you guys, you know, if you're listening and you're new and you haven't figured out, these are things you can learn. I mean, it's not like it's black magic. It's not like you have to have 180 IQ, anything like that. But it does take practice.
Drawing the stuff is easy. It's actually trading it that's so hard. It's putting the stop loss, not being the dickhead who lifts it. That's the problem. You can draw whatever lines you want. Yeah. It's the emotional side. What? Anything else we're looking at here, guys? Before I let you go and we let Birb take his car to the dealership. He rented that car, by the way. For the stream. For the stream.
Bro, I've got so much issue with the car. It's insane.
Yeah, that's what happens with the nice ones, unfortunately.
Real quick here, I've got algo here on the weekly. Again, I've got a diagonal sitting here, but we've got this bullish SFP on the low here. It's not a large wick, so I tend to be cautious around it. But if we can get some follow through here, I mean, I'd be interested in looking at this diagonal resistance, probably closer to around that 20-21 cent area there as an initial target. If I can get an impulsive breakout through there, then we're in we're in this consolidation here, and would be looking for a breakout higher to kind of get you up here around around 40 cents or so. And then that's just kind of how I would look at that. But like I said, you know, it is a bullish SFP. You've got the wick down below that multi-month low over here. But again, the wick isn't overly excessive, so I would be cautious around that. But if you can get that move up, you've got your initial target right there. If you can get impulsive breakout higher above that, you've got a secondary target, and then it starts looking interesting on a, really zoomed out kind of time frame.
See, guys, sometimes you want to buy higher.
That's, by the way, folks, that's a swing failure point, just for people who swing failure point.
It's got about three. I mean, I'm looking at it right now. It's got about three of them on the daily. Right, 1, 2, 3, all below that 15.9 level, and there's bullish divergence oversold on the daily, but it looks like we might get, that's a question mark, but might get bearish, hidden bearish divergence there to follow up. Yeah, I mean, if there's a knife catch if you bought it here, but it could be really nice even just with a target of that diagonal. Yeah. Cheds, you look at, I know this is just not where Cheds looks. I totally get that. So because it's a weak trend on the way down. So, but have you looked at algo? I see you there.
I mean, I look at it. I'm like just going woof woof. It's a dog. I mean, and he makes a point. He's making a great point, because you always do want to pay attention to. And I made this point earlier about like a double bottom with a lower low. You kind of get that stop loss sweep. So
that's how you get the divergence. Yeah.
Yeah, you get a brief sweep, but I mean, not a lot of response yet. And this is just a pretty strong trend, which you would just assume continues. Trends tend to continue. Most, 2/3 of reversal patterns fail, right? So I just, for me, woof, woof, I don't like it. I'd wait here. I mean, look, you got a very clearly defined.
There's no alts that you like, right? I mean, you're not into it right now.
Well, look, first of all, for algo, real quick, for algo, I would just wait for algo to get back above like 28 cents, and I would happily long, because that would be a reflection of really, the red light turning orange and maybe getting ready to turn green. You have a recapture of a well-defined lost support level reaffirmed as resistance. Kind of wait around here and get chopped, but I would go long an algo above 28. Here's some alts that look good, and I mentioned a few earlier. Ocean looks pretty good, right? We go to the daily chart. I'm looking at alts with the price above a rising 200. Ocean looks pretty good. It's testing that area. Even FTM looks okay. It's testing that area. Fetch looks okay. INJ looks really good, right, for altcoins. Right. So there's a few decent looking altcoins. I'm not necessarily jumping in, right here, right now during the show. So that's how I would answer that. Those altcoins I mentioned. Anything above the 200, I'm looking at.
We got like 2 minutes left. Birb, you got any final thoughts before you return your car to the dealership?
Yeah, somebody please take this shit out of it.
How's married life? Hey, Adrian, how's married life, man?
It's good. It's been good, man. My hair is growing back, as you can see. Right?
So, wow, I didn't know that it worked like Rogaine marriage. That's cool.
Right on. Yeah, one last point is that I wanted to actually highlight on and reaffirm on what you were saying, Chris and Chess. You guys were very right about pointing out that trend lines are basically trends, right? I mean, we are looking at trends and not trend lines. Trend lines do not have much a sense on their own, right? They can help us at times just clarify on the direction, and just maybe luckily at times in some configuration you're going to have all those peaks and troughs being connected one way or another, right? Otherwise you're looking at a trend, right? And trend line is an indicator that is supposed to help you navigate the trend and catch it in the right direction, right? So that's what you want to use. That's what you kind of like aim at for having the trend lines in one place. And by that, we are not talking about the ideal numbers. There are no ideals in the world, right? So I would highly encourage everybody to reconsider when they plan on anchoring in one specific level, as in, I'm going to buy or sell at 2677.6.33 millions, whatever.
25
right?
212.
Exactly, right? So instead of picking those cherry picking those one random numbers that have no much technical sense, right? For whatever the reasons they are, I would highly encourage everybody to operate within the zones, right? And those are lines in the sands. Those are something that is supposed to help you just get a little bit of a better idea. However, still quantifiable, technical analysis, evidence-based technical analysis, the ones that you can quantify, apply statistics, right? Have those different averages for the benchmarks, observe the daily ATRs, and conclude based on numbers and facts rather than opinions. And if I say, it's this one at this one level is bullish or bearish, so get rid of the opinions, focus on facts, and you're going to get so much profitable, more of the.
I like the summary. Perfect and a great way to end. Thank you, legends, for joining. Tomorrow we will obviously have a roundtable. Now, we had two, so I'm trying to figure out which one we're actually doing tomorrow, to be quite honest. Either way, it's going to be amazing. But we're working on, because of the coincidental timing yesterday of Ledger having their issues, I had just literally 2 days before interviewed Pascal, and we posted the podcast like 2 hours before all the Ledger FUD, and where we talked about that new system and how great it was.
Oh my goodness.
But tomorrow we're trying to get together a panel of hardware wallet experts to really talk about what this means.
Very cool.
So much pleasure talking to you guys.
Good to see you all, for sure. For sure.
Great to see you guys.
Great format, Chris. Glad to talk to you, man, finally. And
for sure.
Thank you for everything. Scott, you're frozen, but you still look good, buddy.
This guy's ready to jump down somebody's throat.
Are we taking over? Are we taking over or something? Should we hijack that?
Yeah. Why not?
Yeah. Otherwise, Chris, I really enjoyed the time that we had, basically on the conference, and I was planning on visiting also, Austin, right, and then the whole Texas and the whole, Tennessee areas, all those points.
That's a great city. Austin's great.
Right?
Chris, you're in Austin?
Yeah, I'm about probably, I guess, about an hour east of that. I'm just north of Houston.
Okay.
I'm on Lake Conroe. So
all right.
Yeah.
That's a cool little area, man.
Very nice. Yeah, I moved over from the other side, from Bernie, just north of San Antonio. So a lot of green. I'm not used to the rain. But
what is the Rio? What is that river? They go rafting on the river there near Austin. There's that long Guadalupe.
Oh yeah, there on like through New Braunfels and all that. Yeah.
I went one time and I drank a bunch and then I fell off the tube and I was like, oh my God, I'm drunk underwater. And it was just, I was like, whoa, like stop. Somebody help me out. It's a good time down there. I love
it's
that
crazy.
area.
You got to, I'm telling you, so many people were at the conference there in Austin and nobody actually did their thing. They didn't go there and do that. I'm like, man, you're here. There's a couple of things you do when you're in that area. You eat local barbecue, like blacks or something like that, and then you go float the river.
I want to try it. I want to try it. Sign me up, man. I'm in.
That's it. Well, I don't know what we're going to be doing here. I don't have the ability to turn the show off. So I don't know where Scott ran off to. He's probably freaking out right now. So
I'm telling you, we hijacked the show. We are on the show. Like, let's continue. Let's continue that no matter the cost. What kind of guitar you have behind your back?
oh man, I've got everything. I've got Gresh. I've got
What's the acoustic
Cole
one?
Clark. I've got I'm Taylor. I've got more than a few over. Yeah. So
What's
I got
the
a
one
drum
that is
set.
behind your back?
It's funny because I've got this huge office here, right? So this office is huge. And so I'm still trying, I moved here back in into September, early October last year, and just been so busy because right away I was at the conference there in Vegas and then just doing everything we're doing. And I still have my drum set in pieces sitting off over in the corner over there. But yeah, it's trying to say, okay, well, can I at least work? That's the thing right now.
Beautiful. Music
That's
is great,
awesome.
man. I admire anybody who plays any instrument. I love music, man.
For sure, man. My son picks it up so much easier than I ever did, though. He just, man, it's crazy. He learns an instrument like in a day and a half. Guitar, piano, drums, whatever. It's just absolutely crazy. Harmonica. So
All right. Incredible. They have to got it after someone, right? Eventually.
that's right. Well, hopefully, anyway.
You guys are talented, beast. I'm so happy and honored to be friends with you. I mean, anytime I see something of that you guys show up on Twitter, I immediately press like. The only point is that I do not often get to see your tweets, Cheds, anymore, right? I don't know what's going on.
What?
I'm literally only see it whenever someone reposts it. It's just once every couple of weeks maybe that I see your tweet on my timeline for some reason.
The
What's
Twitter
going on,
gods,
man?
the Twitter gods are trying to keep us separate, man. It's too powerful.
Maybe that's the punishment for my shitty Litecoin bet, right?
There you go. Right, it's penance.
That's all good. Well, hey, it's
I
good to
know,
see you
right?
guys. It was really good to see you guys.
Yeah.
I'm gonna bang out, man.
Likewise.
All right, brothers.
Yeah, you guys keep doing what you're doing, guys. Putting that information out there. All right.
All right, we'll talk to you soon.
All right.
All
God
right,
bless
take
you. Hey,
care.
legends.
Peace.
All right.
God bless. Hey.